Hello, Ian Marshy, Winning Edge Real Estate. And I may surprise you, but I'm not here to sell you something right now. What I want to do is just spend the next 5 minutes or so educating you on some things I've learned over my 40 years of investing in property so that perhaps I can help you ensure that whatever your next purchase is, you're going to be very happy with it. So if you have a look here on this screen, what I've done is just put a short few pointers together that I'd love you to take note of as you're considering your next investment, because there's a number of things that if you do check them, it's going to prevent heartache for you in the future. So what you're going to learn are really just 5 of about 40 things that I do before I make a decision to offer a product or an investment to a client. Before I get on to that, I just want to be clear that, look, I'm not a financial planner. I can't give financial advice. My only qualification, I've been investing since I was 19. I've built 5 multi-million-dollar companies, and I've learned a thing or two from some very, very expensive experience. So this is just for educational purposes only, and I always recommend you seek professional advice when making a decision. So a little bit about me. It is important when you listen to someone that they're hopefully at least 5 times more successful than you in that particular area. And so I'm a boutique real estate agent. I do this because it's better than being bored, retired. I've personally bought and developed 9 properties worth over $13 odd million. And I believe that property is one of the easiest ways to build wealth without stuffing it up. Okay, here's just a couple of the properties that I've invested in and purchased over the years, from Seven Hills and Toongabbie. I actually bought this property when I was 19 in Toongabbie and subdivided it and put 2 villas on the back. And now these days, I'm lucky enough to live on my horse property in Goonaba, and you've got to have a compelling reason for me to leave it. Okay. I'm also a best-selling author and a business consultant, but now I enjoy helping people find great real estate. Now, I only share that with you just so you can determine whether you should keep listening to me or not. So when you're making an investment, you must have a system, okay? Whenever you make a purchase, it doesn't matter, it doesn't matter how complicated it is. In fact, it's better if it's simple, but you must have a system. And I'm going to go through a short system with you in a moment. But before I do that, I just want to talk about some of the pros and cons of buying off the plan. Okay, so look, when you're buying off the plan, it means that it's actually not built yet. So there's a lot of really good things that can occur and also bad things that can occur when that property is not actually built. So let's cover off on some of the pros first. Okay, so if you get in early enough, you can save up to 20%, even 30% on the end retail price of that apartment when you purchase it. You also may be able to negotiate some changes to the style or the interior of the apartment. Builders do need to give a guarantee on their work, so you're going to have everything fixed over a period of time. And you may even qualify for first homeowner concessions, if depending on what state, it varies from state to state, but you may get a first homeowner's grant. Now, there's also big tax benefits, so you can claim a lot of depreciation. Those of you that get frustrated with the amount of tax that you pay, or more importantly, those that get frustrated with the way they spend the tax money that you pay, you get to depreciate a new development up to nearly 50% over the next 10 years, which is really cool. Also, you've got the potential for capital growth while the development's being built over generally maybe a 2-year period. Also gives you time to save more money, because all you generally need to do is put down a 10% usually deposit, some even 5%, and some of them you can use a strategy called a deposit bond that I won't go into much, but you can buy a $1 million apartment with as little as like $15,000. Stamp duty, you save on stamp duty, well, in Queensland, until everything's complete. So all you need to do is put down your deposit and then nothing else until it's all completed. Now, there's also some cons, and I just want to speak to this because it's not all roses and sunshine, okay? If you don't know what you're doing, there's some traps that people fall into, and it's very sad. Some of them, bankruptcy. If the developer goes bankrupt before your project's complete, you may not get your money back. I suggest you always make sure that you know your money's being put into a trust so that the developer can't get access to it until the project's complete. The property may be worth less than you purchased it for if you haven't chosen wisely or if market conditions suddenly turn. And also changes to interest rates, okay, may affect your end borrowing capacity. So just be aware of that as you're making that decision. There's some really cool things. I mean, this is how I make a lot of my money, is by finding the right development in the right area and investing at the right time. Here's one here, the client that purchased, not my client actually, a friend's client, I should be clear. They purchased at the Meriton, okay, $1,280,000. Now, they collected for about 10 months, they collected rents. They got $52,800 in rent. When they sold it for $1.53 million. So they made $302,800 in just 10 months. That's pretty well 3 years of salary for a lot of people. Not too bad. Here's another example of the Pearl in Surfers Paradise. They purchased their apartment for $750,000. Sold it in 23 for $995, so they made $245,000 in 5 months. Okay, now there's many examples just like that, ladies and gentlemen. But again, I want to be clear. We've gone through a property boom, obviously, unless you've been hiding under a rock. You realise that the market has been very strong, and I believe it's still going to stay very strong in Queensland, especially with the Olympics coming up. Don't take this as, oh, just buy any apartment and you're going to make lots of money, because there are also very sad stories that can occur as well if you are not sure what you're doing. Okay, so with this, basically what we're sharing with you here are the amounts of profits that can be generated when you've got just a little bit of knowledge and make the right selection. And what I want to share with you here are just 5 things that I hope you will ensure you check before making any decision on an investment. And the first one is look at the long-term capital gains. So many people will speak, oh, look, this suburb's gone up 15% over the last 12 months. Isn't that fantastic? And they try to sell you on that. Well, that might be fantastic, but what I'd suggest you do is look over 10 years. What is the average capital gain over the last 10 years? And hopefully it's over 5.5%. That's sort of a good benchmark that I'd suggest you consider as the average long-term capital gain. Okay, so check that one off. The next thing I want you to look at is, what is the demographics, the average household income? Is it a wealthy suburb? Have a look at you can easily find it by doing a bit of research on the internet now. You could probably even ask ChatGPT, but you want to be in, and I'm talking for investors here really, but you want to find people, double income and executives that have that sort of lifestyle where you know that they're not going to be struggling every week to be able to find money for the rent. So check out the average household income, and obviously as that income, if the executives and the wealthy people like that suburb, that's going to help the value of your property appreciate. Okay, so that's another thing that you should be checking out, is what is the average income. The third thing is look at the demand-supply ratio. Okay, what do I mean by that? Well, in some suburbs, there's an oversupply of apartments, and so that means that there's going to be not enough demand, which means the value of the property may decrease. However, if there's an undersupply of apartments and there's lots of people that want to live in that suburb, that means that your supply ratio increases, and so does the value of your property. So check out the demand supply ratio when you're considering an apartment. Okay. The other thing to think about, this is step 4, is check blacklisted suburbs. Okay, because the banking financial institutions may not even lend to you in those areas. They believe that, wow, this has really been overcapitalized, there's too many apartments, the apartments are too expensive for the area, those types of things. They actually have a blacklist, and you may not even be able to get financing in that area if you're not careful. So just double check that, make sure that the suburb's not blacklisted by financial institutions. And the other one, which is important, is if you're purchasing an apartment and you're expecting these beautiful city views or river views or ocean views, make sure you go to the town planner, check out with council. Maybe don't necessarily trust the information you get from those that have an agenda, and just check for yourself, could it possibly get built out and block your view? Okay, it's a very, very common occurrence. Let's just say inexperienced person. They've bought their dream apartment. They see these beautiful lights everywhere, and they've brought all their friends around. Next thing you know, 6 months later, they hear jackhammers and someone's building another high-rise right near them and blocks out their view. And it's, as I tell you what, the amount of times I've seen that occur, it's pretty frustrating for those people. So they're the 5 things that, at a minimum, you want to consider before making a decision. Now, I look at all of these criteria before I recommend any properties that I have on my books to my clients. And this is only a fraction of things that you should consider before making an investment. But if you follow these 5 things, then it is going to put you ahead of the curve, okay? So that you're going to be pretty happy, more than likely, with the end result of your apartment. Basically, what I've done, I just want to give you that knowledge. So as you're considering a property, then you're going to have a lot more confidence that it'll work out the way you want. What I will say is that the enemy of wealth is delay. Okay, I've been a business consultant for many years, and more money is lost by people in not making a decision. Okay, so the enemy of wealth really is delay. And what I say to you is just look, work out what you want, then have your system and your criteria, and then tick all the boxes. Okay, and if you want any help, that's what I'm here for. You may see a link down below, or you can see me at winningedgerealestate.com.au, or wherever you're seeing this, you'll see a phone number around there somewhere. So again, I hope you've learned something today. What I like to do is understand what my clients are looking for, and then once I understand, then I can help provide you recommendations on what you're wanting to achieve. Again, hopefully I'll talk to you in the future. Until then, bye for now.